Peak stability. This editorial assesses Pakistan's current external balance, suggesting that while economic stabilization appears to have peaked, warning signs indicate that renewed pressures may soon emerge. The signs are coming, but the verdict is still awaited. Well, signs are coming implies that indicators of change are visible, yet the verdict is still awaited, means that the final outcome or confirmation has not been reached. Early indications suggest the much vaunted economic stabilization that we have seen since July 2023 is now hitting its peak, and from here on the government will struggle to keep things under control. Much vaunted is an adjective meaning highly praised or celebrated. Economic stabilization refers to the period of improved economic conditions since July 2023. Hitting its peak means that the positive trend may be reaching its highest point, after which it might decline. The sentence warns that future management will be challenging. The key is in the external sector, which measures the inflows and outflows of foreign exchange, primarily dollars. External sector refers to the part of the economy dealing with international trade and finance. Inflows and outflows denote the movement of money, here mostly US dollars, into and out of the country. In the period from July to January, exports grew by just over $1 billion, but imports grew by more than $3 billion. This sentence provides concrete trade figures, highlighting that while exports increased moderately by over $1 billion, imports surged by over $3 billion, signaling an imbalance. That fact alone tells you that history could be getting ready to repeat itself once more. This implies that the widening trade gap might lead to recurring economic challenges, suggesting a historical pattern of similar imbalances. But it goes further than just the trade data. This short sentence signals that additional factors beyond the trade figures must be considered. Government supporters will argue that remittances have risen by $5 billion in the same period, and therefore the current account still managed a surplus of $682 million in this period, despite the deterioration in the trade account. Here, remittances refer to money sent home by Pakistanis working abroad. Despite a worsening trade deficit, an increase in remittances allowed the current account, a broader measure of external balance, to record a surplus of $682 million. Government supporters are those defending the current policy narrative. This is correct, but our own history tells us that when the inflection point arrives, this is how it works. First, the trade deficit widens, the month-on-month current account goes from surplus to deficit, and then the deficits continue to grow until reserves either begin to erode or the government goes searching for more debt in order to shore them up. Inflection point is a term meaning a turning point where a trend changes direction. The sentence explains that historically, a worsening trade deficit eventually causes the current account to flip from surplus to deficit, leading to diminishing foreign reserves or an increased reliance on borrowing. If history is any guide, it is possible we could be sitting on this inflection point now. This statement suggests that, based on past patterns, the economy may be at a critical juncture where the positive trend will reverse. January data shows the trade deficit widening, as well as foreign currency liquidity coming under pressure in the market, as measured by the net foreign assets of the banking system. The sentence highlights that recent data for January indicates two troubling trends: an expanding trade deficit and reduced foreign currency liquidity tracked by net foreign assets, NFA, which is an indicator of a country's external financial health. It is still early, but January saw a key trend break. Trend break means a noticeable change in the pattern of economic indicators, suggesting that the previous improvements might be reversing. The trend was a near continuous improvement in the NFA position in the markets, which began deteriorating again as of January 2025. This clarifies that after a period of steady improvement in net foreign assets, the situation reversed starting in January 2025. If this trend continues, it will corroborate the argument that stabilization has peaked and the economy is likely to see a return of pressures on the external sector. Corroborate means to confirm or support. This implies that if the negative trend in NFA persists, it will validate predictions that external pressures will reemerge. This is the raw, rudimentary reality. Raw and rudimentary emphasize that the situation is basic and unrefined, reflecting fundamental economic challenges without any embellishment. It is early to make a definitive call, but it is not too early to start raising questions. This sentence acknowledges uncertainty, but insists that warning signs already warrant scrutiny and discussion. Are we at the inflection point? What could change between now and June to change this? Two rhetorical questions prompting debate about whether the turning point has been reached and what factors might alter the course of economic trends. Perhaps the state bank can slow the pace of its purchases from the open market to help leave some liquidity behind for the growing needs of the private sector. This suggests that the State Bank of Pakistan might adjust its monetary policy, specifically reducing its open market purchases to preserve liquidity for private enterprises. Whether they can afford to do so depends on where they stand on their net international reserves target at the moment. This implies that any policy change is contingent on the current level of international reserves, which serve as a buffer against economic shocks. That's a hard, non-negotiable condition with the IMF. Non-negotiable means it cannot be altered. The sentence stresses that maintaining adequate reserves is a strict requirement imposed by the IMF for further support. Perhaps the pace of import growth will plateau sooner than it seems, or exports will receive a boost. This speculates on possible positive changes. Plateau means to level off, and receive a boost implies an increase, both of which could help balance the external accounts. Remittances could see a bump in Ramadan, thus shoring up the current account momentarily. Ramadan refers to the Islamic holy month of fasting, during which remittances often increase. Bump is a colloquial term for a small increase. Shoring up means reinforcing or supporting the current account. But it is hard to see how the renewal of economic activity that is undoubtedly underway with the reductions in interest rates will not spur import growth. This sentence argues that lower interest rates are likely to stimulate economic activity, which in turn typically leads to increased imports, further worsening the trade balance. And our own history assures us the pace of import growth eventually swamps exports and remittances combined. The phrase swamps exports and remittances is a metaphor indicating that import growth will overwhelm or far exceed the combined inflows from exports and remittances. It usually takes around 2 years to reach this inflection point, but in the past they have managed to postpone its arrival by another year, maybe even 2, by recourse to extensive external borrowing. This provides a historical time frame. Generally, 2 years are needed to hit the turning point, but governments have sometimes delayed it by borrowing heavily from abroad. It has now been 1.5 years since stabilization began in July 2023. It makes sense that the inflection point is coming if it is not already here. This states that since stabilization started 18 months ago, it is reasonable to expect the turning point to be imminent or already reached. So what next? A rhetorical question introducing the discussion on the likely consequences of reaching the inflection point. Usually the arrival of this point, let's call it peak stability, represents the limits of what the state can extract from the economy for the purposes of extinguishing its deficits without major structural changes. Peak stability is defined here as the maximum extent of economic stabilization achievable under current conditions. Extract from the economy implies government revenue extraction, while extinguishing its deficits refers to reducing fiscal imbalances. The phrase "without major structural changes" underscores that deep reforms are necessary for sustainable progress. Through an intensified regime of extraction, high interest rates, steep devaluation, large tax increases, sharp spending curbs, resources flow in a gigantic movement from private back into public coffers. This sentence lists measures used to extract resources from the private sector: high interest rates, steep devaluation, large tax increases, sharp spending curbs. Gigantic movement from private back into public coffers is a metaphor describing a massive transfer of funds from the private sector to the government. But the process finds a natural limit, an endpoint past which it cannot continue without something, somewhere, breaking. Natural limit implies there is an inherent threshold beyond which extraction becomes unsustainable. Something, somewhere breaking is a metaphor suggesting that continued pressure will eventually cause a breakdown or crisis. It's a subtle craft trying to determine when that point is reached. This means that pinpointing the precise moment when the economy reaches its extraction limit is challenging and requires careful analysis. The data provides clues and leads, and by the time the downswing starts showing up clearly in the data, it is too late to do anything about it. This suggests that economic indicators will eventually signal a downswing. But if one waits for clear evidence, remedial actions may be ineffective because the reversal will already be in progress. That is the peril or the promise now. This phrase indicates that the current situation presents both risk, peril, and opportunity, promise, depending on how the government responds. Is liquidity tight in the interbank market? Some conversations with bank treasury officials suggest so, but it is hard to say with total confidence. This questions whether there is a shortage of funds among banks, liquidity tight. The uncertainty is noted based on informal discussions with bank officials. The stakes are high. A brief, emphatic statement underscoring the importance and potential consequences of the economic situation. If the inflection point has indeed been reached, some signs will point the way forward. This implies that if the turning point is here, further data and indicators will confirm it, guiding policymakers on next steps. Old reflexes will start firing in the top levels of government again. Old reflexes is a metaphor referring to habitual responses. This suggests that traditional, perhaps reactionary government measures may be reactivated. The search for ways to spur economic activity will be ramped up in the highest levels of government. Spur economic activity means to stimulate the economy. Ramp up indicates that efforts will intensify. Flags will begin to come up in fiscal accounts as shortfalls surface. Talk of a mini-budget swirls. Denials come about any new taxes, and maybe the IMF review drags on longer than it usually does, with leaks suggesting the fiscal gaps are larger than what the government has been telling us. This sentence uses several idiomatic phrases. Flags indicate warning signals in fiscal accounts. Mini-budget suggests a small-scale fiscal plan, and drags on implies delays. It paints a picture of growing fiscal challenges and a lack of transparency in government reporting. In the markets, the dollar hits choppy waters, the government blames hoarders, maybe orders a crackdown on money changers, and some industry big shots start blaming the banks for engaging in speculative trading. Choppy waters is a nautical metaphor describing turbulence in the market. Blames hoarders and orders a crackdown imply reactive, possibly ineffective measures. Speculative trading refers to risky financial activities that can destabilize markets. In the latest iteration of this cycle, the government could ramp up efforts to undertake one privatization or maybe manage a large inflow via a spectrum auction. Latest iteration suggests that this is a recurring cycle. Ramp up efforts means intensify measures. Privatization and spectrum auction are terms for selling government assets or licenses to raise funds. We could still be a few months away from this inflection point. This acknowledges uncertainty. The turning point might not have been reached yet. But if we start seeing deficits growing in the current receipts, trade balance plus remittances, and these are being balanced out by one-off inflows from borrowing, spectrum auctions, or sale of public assets, then you can be certain that the inflection point has arrived. This sentence outlines a scenario where temporary financial inflows are used to cover growing deficits. It implies that such a pattern is a clear signal that the economy has reached its maximum stabilization capacity. Once that happens, exchange rate pressure mounts, the pace of monetary easing halts, and fiscal tightening returns as a priority. Exchange rate pressure means that the currency will face downward pressure. Monetary easing refers to policies aimed at stimulating the economy, and fiscal tightening means reducing government spending or increasing taxes to balance budgets. Pakistan is not ready for growth. A clear, stark statement indicating that the current economic foundation is too weak to support robust growth. Making growth happen despite the weak footing of the economy risks unraveling the hard-fought gains of the past 18 months. Unraveling is a metaphor suggesting that sustained economic growth under current conditions could lead to a collapse of recent improvements. Hard-fought gains refers to the significant improvements achieved over the last 18 months. The writer is a business and economy journalist. Provides the author's credentials and contact details, establishing authority on the subject. Khurram.Husain@gmail.com. X @Khurram Husain. Published in Dawn, February 20th, 2025.